So my name is Gray Tanaka. I'm here to give a demo of our machine learning-based stock price forecaster with natural language processing. I like to keep this interactive. So definitely chat on the web browser if you have questions or if you need clarification on anything. And we're going to start off with who's on the call. So we'll do that. I'll give introductions. I'm going to talk about machine learning-based forecasting, why it's needed. I'll be talking a little bit about our trading returns, the tools that we'll be using. I'll be going over some code and giving a demo of it, then talking in detail about the course, and then answering any questions. Now, questions I actually like to do throughout this whole program, just to keep this interactive. So, please, if something pops in your mind, just chat it right away. So I thought it would be good just and kind of fun to start off with who's on this call. So I should change this. So it's not Zoom chat, but the circle chat. Just put down what is your occupation, how do you know how to program code, and then how much investment experience do you have in years. So I'm going to give a little example here for myself. So occupation is machine learning expert. And then I know how to program. Okay. And then investment experience. I've been doing this since graduating college. Okay. Oh, I see Jim's an electrical engineer. I'm also an electrical engineering major. So go Jim. That's awesome. Okay. So who am I? So my name is Gray Tanaka. Just a quick background on myself. I went to Caltech, studied electrical engineering, then Berkeley, basically did EECS at Berkeley, electrical engineering, computer science, then did some graduate school at Stanford, and then did a lot of work around GPUs. I've done a variety of different things in my career. I started a bunch of companies, including the current one, which is Pika Group, which does a lot of work around algorithmic trading. My startup got funding from Andreessen Horowitz Miller Ventures. Andreessen Horowitz, these are some top tier venture capitalists. And what Lumen Wealth is, it's an amazing organization where they teach people how to fish. So a lot of great information about how to do algorithmic trading, how to do crypto, how to do machine learning, a lot of good free content. They have a really active YouTube channel where there's a lot of, if you guys haven't seen this, I would suggest you subscribe, but there's a lot of great content on here, reviews, how-tos. So I would suggest you guys go to this, and there's content coming out every week. So I would subscribe and watch some of these videos here. You guys can find the channel on YouTube just by searching for Lumen Wealth. And yeah, definitely subscribe. We also have a Discord channel, so let me show you that. So this is a crazy active Discord channel. So what you'll see is channels on a bunch of different things. It's hard to keep up because there's so many people active on it, but it's nice because first of all it's free, and then it's a great way to kind of talk to like-minded people, and you don't have all the spammers that you have on some of these other things like Reddit. And a lot of people who've taken our courses are also on here. So there's a lot of alumni. A lot of people help each other. It's a great way to get encouragement as well as trading ideas. So I want to encourage you guys to check this out as well. And you guys could actually, what I should do here is let me just put this into the chat so you guys have it. So this is our Discord, and let me drop in the YouTube channel. Okay. And then, okay, let me go back to slideshow. Okay, and And then at the end of this webinar, you'll be getting a survey just asking you guys for feedback as to what went well, what didn't go well, what we could do better. We do a lot of these webinars, so the feedback's really, really valuable in terms of making it better for our audience. And like I said before, feel free to ask me questions as we go throughout. And I'm a little bit new to this, to Circle, so I'm just navigating the windows a little bit here. Okay. Yeah, so let's see. Yeah, so yeah, Joe, thank you for asking about the links. Okay, so for those of you that just joined, if you can in your Zoom chat, actually you should be saying the Circle chat. Just try to put these 3 things in there. That way I know the audience better, and you guys could get to know each other as well. Okay, so let's move forward. So if you think about what is the essence of trading, it really revolves around forecasting. You're making some sort of assumption about the future that stock's going to go up, stock's going to go down, it's going to stay the same. You're forecasting something, and it may be a stock, it may be crypto, it may be foreign exchange, but you're forecasting something. You have some sort of guess as to what's going to happen, and maybe 40, 50 years ago, people would use very traditional indicators like RSI. People still use this. And RSI, which stands for Relative Strength Index, is kind of like a indicator that that something's going to happen. So like in this case here, this is TSG, the STARS group. And you can see that when the RSI hits a certain level, that it means that there's going to be a bit of a bull run for that security, and then until it drops below a certain level. And so it's if you look at this, you can see it's pretty noisy, right? It kind of touches that line several times. So it's not the world's best forecast. It is relatively simple, and it's not terribly accurate. But it's used a lot. It's actually very easy to compute, and in fact, a lot of investment tools have RSI built in, because it's not bad, but it's not great either. It's hard to get an edge using just traditional indicators like RSI. But what RSI is trying to do is trying to be a tool for you to know when to trade, when to buy, and when to sell. So it's a very simple tool. Now, the problem with traditional trading indicators is twofold. So if you guys haven't seen this website called Seeking Alpha, it's a great website. They have a lot of good investment advice on there. But one of the articles they had in there was how algorithmic trading dominates 80% of the stock market. And so a lot of the trades you see on the stock market aren't some human, saying buy or sell. It's some bot that's buying and selling. And the problem with that is that the most profitable trading strategies are already automated completely. So like, for instance, like RSI, there's probably some sort of RSI bot watching TSG group. And whenever it does a certain thing, it would actually automatically execute, and execute probably faster than you could do it manually. And so, trading strategies just based on these really simple indicators have largely been eliminated by algorithmic trading, because all these simple indicators have pretty much whittled away any possible profit. The second problem with traditional trading indicators is that these simplistic indicator models don't really have the capacity to complex forecasting patterns. So the way you measure how sophisticated a model is basically how many parameters can it hold. And these really simple models, like I'm showing, like RSI, we're looking at maybe 2, 3, maybe 4 at most type of parameters. And so they're very, very simple relative to, if you look at some of the large network models out there, like GPT-3, you're looking at 10 billion plus type parameters, right? So these traditional trading indicators are not, they can't really detect sophisticated patterns that happen in the market all the time. As a result, it's very hard for individuals to get an edge, to basically see some sort of pattern in advance of other traders. So this is the problem with traditional trading indicators, is that they're not, because so much of the market's automated and they're so well known, it's really hard to get much of a edge at all with these kind of indicators. So now, what's the advantage and disadvantage of traditional indicators versus machine learning? Well, one of the first big advantages of traditional indicators is that they're super easy to calculate. In fact, that's why they were used very early on, because in the early days, computers were relatively expensive, and to calculate, some really complicated indicator manually could be really difficult. So most of the indicators that people use are easy to calculate, easy to understand, but they, like I said, they have very limited ability to detect complex patterns. So, and then the other thing is they're just frankly too popular. Everyone knows about them already. And so you really can't get much of an edge because of these factors. Machine learning, was much harder to do. It's much more computation complex. You're talking about some serious machine time sometimes to train and to get inference for. It's also a lot harder to implement. But the real big advantage is that they could detect much more complicated patterns, even perhaps more complicated than a human can detect. And you're just limited by how much compute power you have, and of course training data. So and it's much more cutting edge. So even now, relatively few investment firms use straight machine learning, just because of the fact that it's new, but also because a lot of the machine learning is a little bit black box. So it's harder for people to trust it, right? Because it's not as easy to understand as with traditional indicators. Now, let me back up a little bit and explain what is machine learning. So I'm just looking at the chat, and it looks like some people know how to program and some people don't. So let me kind of give you guys kind of a kind of nutshell version of what is machine learning. So in order to understand what machine learning is, we have to understand what is conventional programming. And what I mean by conventional programming is like what you do in Python. Now, Python can be used to do machine learning. In fact, most of machine learning is done in Python. But the difference between conventional programming and machine learning is that there's a program that you write in Python, right? So that's the input. And then there's some sort of data that the program processes, and then it spits out some sort of result. What machine learning does is it kind of turns it around. So rather than the input is the program, what happens is with machine learning, you have the data plus result. And this result, the fancy word we use is something called ground truth. This is the ground truth. And then it spits out the program. So what machine learning does is it learns what kind of program to create or to have that gives you the kind of result given this kind of data. So it's really cool. I mean, it's machine learning is actually more how like we learn, because if you think about ourselves as humans, we don't have some sort of brain surgeon, or very few of us have someone like who opens our head up like a brain surgeon and wires the wires. Okay, this is how to learn how to bounce a ball. Most of us learn how to bounce a ball through trial and error, right? Or watching other people. And so, but we're not explicitly programmed how to bounce a ball. And so, machine learning in some ways is much more analogous to the way we learn. And in fact, I would argue it's maybe easier for non-programmers to use versus conventional programming. Because conventional programming, you're explicitly telling the computer how to solve the problem, versus with machine learning, you're just providing training data, and then it figures out the program. And sometimes these programs are so complicated that you couldn't ever do it manually. And a good example of this is like computer vision. It's very, very hard to program, a computer to recognize, let's say, a face or a person. But with machine learning, it could make a program that could do that fairly straightforward. Again, so I want to encourage everyone to ask questions as I go. So, so let me talk a little bit about. Let me talk a little bit about my company, Pika Group. So, what my company does is we automate day traders. So we have a lot of people who approach us who have some sort of trading strategy they're doing manually, and they want to scale it up, because the reality today is that there's a lot of trading strategies that work, but they don't really yield a lot per trade. And so you got to do a lot of trades. And so what we do is we automate a lot of that. So we do it as a consulting, and what we offer is a way to kind of we have like some pre-made algorithms that we can start from. We customize it. We'll host it on the cloud for our clients. We provide a nice user interface around it. We also have a whole bunch of fail-safe measures, so that in case something goes bonkers, and things always goes bonkers, you don't lose your whole portfolio. We also have a backtesting infrastructure, as well as a whole suite of machine learning algorithms that you can use to build your model. And so that's what my company does. And just to give you some reference, and just first of all, safe harbor, which is that this is just examples, just not a promise of what's going to happen. So it's going to be mileage would vary, right? Well, I guess what they say is prior results are not indicative of future results. Anyways, so the reason why people use machine learning is because if you look at, there's something called a Sharpe ratio. And for those of you that don't know, a Sharpe ratio is a way to measure risk-adjusted returns. And usually a Sharpe ratio of 1 or anything above 1 is actually pretty good. So machine learning-based investors can get a way better Sharpe ratio, and mainly because they get a bit of an edge versus traditional investors. And the second thing is in terms of compounded annual growth rate. ML investors get something like 42% compound annual growth rate, which is pretty damn amazing. Now, I'm going to give you guys a quick demo of this. So let me bring the window down here. Okay. So this is Pico Group's portal. Let me see if I can move this. Okay, yeah, next. Okay, so we support several different brokerages, Alpaca, IB, and IB is Interactive Brokers, and Bybit. And so let's just do a back test. The market's closed right now. We'll do a stock. Let me move this around. Okay, I just want to keep this open so that I can see any chat messages. Okay, and then yeah, we're not going to do any bid ask. Although I recommend you do bid ask spread in your back test when you're like just about to go to real paper trade or real trades, because you have to factor this in terms of because there's always bid ask spreads, and so you need to factor this in when you start doing trading for real. We're not going to retrain. Let's see. I'm just going to put a random date in here. Okay. Okay. Starting cash 10,000. Oops. Okay. Okay. So we're going to just do a simple trade. That means if the forecast is higher, then we'll buy, and the forecast is lower, we'll sell. So pretty straightforward. And then we'll have so when the thing is like around 0.3, so when it's forecast to be 0.3 higher, we'll trade, or 0.3 lower, we'll sell, right? We'll buy if it's forecast to be 0.3 higher, or sell when it's 0.3 lower. And then let's do Agilent, which is that. And then let's do just 10 shares. And we're not going to set a max position. And then, yeah, we'll just sell all leftover stock. So we'll exit everything. And then I'm going to use a simple model called random forest rolling. Random forest is the name of a machine learning model. And it's a relatively simple one. And it's rolling in that it will do the forecast and then scoot over 15 minutes, and then forecast and then scoot over 15 minutes. So that's why we call it rolling. So it kind of rolls forward every 15 minutes. So So we just do 15 minutes and trade every 15 minutes. Okay, so I'm going to launch this job, and then I'll flip back to the presentation, and then at the end we'll see it. We'll see how it runs or see what the results are. Okay. Okay, so I'll give a quick demo of how this works, and then I'm going to start getting into some of the code for the example I just launched. So we use a service called Alpaca. Alpaca is a really great service because they have no commission trades. Not to say there's no spreads between the bid and ask, but no commission trades. And they also offer a lot of data for free, which is great. And then we use Python 3, which is one of the easiest programming languages in the world. Pandas is kind of like spreadsheets for Python, so you could do a lot of stuff on your kind of virtual spreadsheet in Pandas with Python. We'll be using the TA library, which is the technical analysis library in Python, and scikit-learn. Scikit-learn is probably the most popular simple machine learning type models in here. We're using Google Colab, Google Cloud Platform, and then Google Natural Language Processing. So Google Colab is really nice because it has these interactive notebooks that allow you to do a lot of experiments very easily. It's also a great way to learn how to program if you don't know how to do so. And then Google Cloud Platform is it's a competitor to AWS. And the neat thing about Google Cloud Platform is that, first of all, when you start a machine on Google Cloud, it tends to start up faster, and they tend to have really great networking performance. But it also has a really great suite of AI tools, like, for instance, Google Natural Language Processing. So I'll show you how that works. So let me show you guys some code. So before I do that, let me just give you kind of a quick overview. So what the code does is a setup. So it basically will initialize everything with Alpaca so we can get data, and then it will scrape FinViz. So let me show you what FinViz is. FinViz is a really awesome website. It has, if you're trying to figure out which stock to buy, you can look at this, and it has just a lot of great analytics on it. So just a ton of data. So we'll go here and we'll scrape data off of this website, and that's how we'll get the training data, because we're going to basically take the news articles from FinViz and use NLP to figure out the sentiment. And so we'll generate train data as well as test data. We'll train the model, generate the predictions, and then analyze the results. So let me show you guys the code of how this works. Okay, so this is Google Colab. It's a really great tool. It basically is free, so you can't beat the price. And it has these things called cells. So this is like one cell, then there's another cell down here. And then you could just have simple Python commands in here. So what we're doing right here is mainly the setup. So this is installing some dependencies. This is importing some of the libraries that we need, like that I talked about earlier, like pandas. And then, the Alpaca library, so we can interface to Alpaca, the TA, the technical analysis library. NumPy is a way to do some computation in Python, and then the sklearn library. So this we're going to be using the random forest model, and then this here just authenticates us. And then I never like to have secrets in plain text, so I use something called Secret Manager. And so what this does is retrieves the secrets from Secret Manager, and then it sets up the API with Alpaca. And then down here we are just initializing the dependencies for using NLP with Google Cloud. And so what we're doing here is we're calling Google Cloud. We're setting up the service here, and then setting up for the NLP. And then we have this simple function here which analyzes sentiment. So we put in the content, and then it just does a simple API call to to the NLP model on Google Cloud. And then the NLP model will basically give a sentiment score between 0 and 1. 1 means it's really positive, 0 means it's kind of negative. So it will return a sentiment score. And then down here, we use a tool called, or a library called Beautiful Soup. I know it sounds like a stupid name, but Soup it's actually a acronym. And so Beautiful Soup is just a play on the fact that it's soup. And then we used a request library to kind of walk through the library. So, walk through the website. So here we're getting information on Agilent from the FinViz website. And you can see what it's doing here. And again, guys, if I'm losing anyone or it's getting kind of complicated, just say something and I could slow down and go into more depth there. But what's it doing here is it's basically setting up things to kind of walk through the FinViz website. And what it's doing is look at the news, and it's scraping all the news headlines from the FinViz website. And then so it's scraping all of that. And then what's it doing now is just doing some processing to do some sentiment analysis. So it basically goes through and then analyzes the sentiment of each headline and puts a score back into this data frame. So you can see that here. You can see a sample of some of the headlines. Okay, and then you can see the score, right? So some of them are not great. 0 is neutral, and then you can see some of them are somewhat positive. So this output here is like the output of the data frame that we have right here. Okay, and then what we'll do now is we'll set up the data frame so that we could start using this to train our model. So we have the score for each of the headlines, and then what we'll do now is we're going to get the historical data from Alpaca. So that's what. So Jim's asking questions. So sentiment analysis as well. Yeah. So what we're doing this is we're looking at FinViz headlines, news headlines of a stock, right? And then we're running it through an NLP to get a score. And we set it up earlier to use the NLP from Google Cloud. And so Google Cloud NLP will classify each of these or rank each of these, not really rank, but give a score, a sentiment score for each of these news headlines. And then what we're doing here is we're basically retrieving the pricing data from Alpaca. And it looks a little bit complicated, and it's more complicated than it used to be, mainly because we had to have this while loop, because what happened is Alpaca has kind of like a limit to how much data you could get from the API. So you have to kind of sit there and pull and keep pulling it to get all the data. So that's what it's doing. It's not really that hard, but it's just more hard than it should be, or harder than it should be because of Alpaca's API limitation. And then what we're doing here is we're and this is what you'll find is that with machine learning, there's a lot of time spent getting the data into the right format. So what this cell is doing right now is just basically getting the data from Alpaca in 1 minute increments from these date ranges, and then what it's doing is it's creating features based off this data. So like it's creating time features, like time of day, Unix time, square, etc. And then it's using the TA library, the technical analysis library, to essentially generate a whole bunch of indicators, right? So you see like Bollinger Bands, you see MACD, you see comma, you see all these kind of very common technical indicators. And So these are features that we use to train our model. And so as an example of what it looks like is, so there's the close price, which is kind of like the ground truth. And then we have like the actual indicator, the feature, right, that we calculated up here. And then the sentiment score. So we have training data for every timestamp, every 15 minutes essentially. Oh, actually, sorry, every minute. We're doing this every minute. So every minute granularity. And then we do the same thing for the test data. So once we have the training data set, we do this, essentially almost the same exact thing for the test data. And then what we do down here is we train it. And what we're doing here is we're training this on a rolling basis. So we have a window size of 15, and then we basically slide this window over as we train. So it's what we call like a rolling window, right? So we're using the random forest to train so we're forecasting 15 minutes in the future, and then we're using the historical data, and the training is rolling, right? It's basically scooting over every 15 minutes. Okay, so we do all the training. This takes a while to run, and then we see, well, how close was the prediction. So we look at the output. Oh yeah, here's another way of looking at it. So this is with all of the features that we used. So like time of day, Unix time, volume, delta, RSI, et cetera, right? So there's a bunch of features that are used. And then down here, you can see how well we did in terms of the actual close price, which is the blue, and then the lower one here, the yellow one, orange one, is the predicted. So you can see now these straight lines means the market was closed, right? So you got to ignore the straight line part. But the squiggles, you can see that the model actually came pretty close in many cases, right? Because you could barely see the blue underneath the yellow squiggles. So now, if we look at which features was most important, you'll see that some features like RSI are really, really important, right? So this is a feature importance plot. So you can see the different features that we had and how important they were in terms of forecasting the price, the future price of Agilent. Okay, now let's calculate what the error is. So we're going to use mean squared error, so basically, so it's a figure of how much error is contained in this model, and also do a percent error. So it's like 20.25%. So pretty dang good, right? And it's percent because of the fact that we already times it by 100 over here. Okay, so now we'll do the same thing without the NLP indicator. So we have the same exact thing we had before, except now we're not going to have the NLP. Okay. So it's the same setup, except we're dropping the sentiment score that we had right here. So no more sentiment score. Okay, so we do the same thing. We train the model, and then when we look at the results, right? We want to know, like, is how important was it to have the NLP? So we use something called ANOVA, which is a way to kind of measure the effect of a model, and we look at something called the p-value, right? So if the p-value is really small, then there's a significant improvement that the NLP had to the model, like so basically the sentiment score. And in this case, you can see that the p-value is really low, right? It's really, really small, and so it's very significant, right? And we all kind of know that. Of course, the news is significant to moving the stock price, right? So that's pretty straightforward. Okay, good. So I think you guys got a basic understanding of how the forecaster works in this setup. Okay, so now, so once you have a prediction, right, what do you do with it? Well, I'm in the demo I kicked off earlier. If the close price, right, is less than the predicted price, times, in our case, we use like 0.3. So if it's times 0.3 higher, then we should buy, right? Because the predicted price is higher than the current close price. But if the predicted price is lower than the close price by a 30% margin, then we should sell. And otherwise, if it's within that band, don't do anything. So I said 30% meant 0.3%. So um, anyways, okay. So we just hold it, right? So this is basically the simple trigger, right? Basically, if the price is higher, buy. If the price is lower, sell, right? Okay, so let me check to see if hopefully the thing is finished running. Let me see if it's finished running. Um, yes, it has. Okay, good. So let me show you guys the results here. Okay, so we were just doing random forest rolling with a simple trigger. We didn't trade very long. We just traded for like um, just a few hours actually. So we started with 10K and now we have, um, you know, a $35 profit, um, which is equivalent to a 29% compound annual growth rate. Pretty dang good Sharpe ratio of 4. Anything over 1 for Sharpe ratio is pretty dang good. And yeah, you can see the profit factor, consecutive wins. So yeah, so it looks like this thing did okay. Not too many negatives. Okay, so this kind of illustrates why people do machine learning. And so this is just trying to show you kind of the basic frameworks of how it works. In the course, we're going to go into a lot more detail about machine learning basics, deep learning, how to build a stock forecasting model. Um, in the forecast demo that I showed you, we just use a lot of the common traditional um, technical analysis indicators as features. We put into the random forest model, and then we just forecast 15 minutes in the future and traded on that. So that's basically what we did. Now, the second thing I want to show you guys is oops. Oh man, every time I forgot to initialize it. So, but okay. So while this is initializing, I'll talk a little bit about it. So there's a really great repository, Limabot. So let me give you guys the link. Okay, let me show this to you guys. Okay, so let me copy this link, and I'll paste it for you guys in the chat. So this is some free source code, and basically it allows you to create your own models just by modifying a little bit of the code or dropping in your machine learning model. So I'll show you guys how this works. Let me see, did the Google Cloud start? Yeah, okay, here it is. Okay, so so after you build your model, right, what you're going to want to do is you're going to want to trade on it, and that's where Limabot comes in, and that GitHub repository that I just pasted in. So let me open this up. So what I'm inside now is Google Cloud. I'm using the Cloud Shell editor. How come I can't open it? Let me refresh. Oh, it just did. I just had to be patient. Let me try that again. It's like super slow for some reason. Oh man. Okay, I'm gonna just refresh this. I don't know why it's so slow. So, okay. The problem is that if you don't use this after a while, it kind of times out. So the great thing about the Cloud Shell editor is that it's free. The downside of it is that if you don't touch it, it goes to sleep. Oh, let's see. David asked, which part are you opening? Yeah, I'm just going to Google Cloud, and then Google Cloud. I have some code on here that. So once you have your model, you can use a service like Pika Group, which could host it for you. Or if you want to host it yourself, you could go to your own Google Cloud. I don't necessarily recommend that you host it on your own machine. But yeah, let me open up the product again. Okay, now it opens. Um, okay, so yeah, and so the reason why you want to run stuff in the cloud is because you don't have to worry about the machine crashing or shutting down. You don't have to worry about your internet connectivity or your power going out. So when you go with production, it's probably good to to always always um, run it on in the cloud. So um, maybe before I run it, I'll show you guys what's going on here. So yeah, redundancy. That's a good point. Um, okay, it's okay to develop locally, but I would definitely in production run stuff in the cloud. So let me show you guys what's going on here. So this is the data directory where this file here would just download data from Alpaca and dump into this directory, and then um, outputs of the run would be dropped into logs, and then main is the main thing where we'll call the ML strategy. So here's an example of our machine learning strategy here. So um, um, so we just have a simple model in here, and um, uh, so once in Colab we have something that we think we like and we think works really well is accurate, we would instantiate it into this file here. It's ML strategy, and then what we'll do is so you'll see it's kind of like similar stuff that we had from our Colab notebook. Um, so so once this is all set up, we'll call it inside of um, main.py, right? And here basically is where we use Lumabot, right? As Lumabot gets a lot of the backtesting set up for us, you could set the budget. You can say where the log files are, what the strategy is called. You can specify what the symbol is going to be. You could talk about like what periods of time you want to start the backtesting. And then where's the data that this um, uh, 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 that you could have all of uh, the pricing data, and then let's see, and then let's see, yeah, and then you could select um, the uh, um, the strategy. You essentially the strategy here, and then of course, you have to have all the credentials right, and then just run it. So let me just run this right now. Okay, so let's let it run. It takes a bit to run. Um, so as it runs, I'll show you kind of what the results of this are. Um, so um, so as it runs, it will output charts of where how the machine learning did, and then when it bought and when it sold. So so this is the thing that Lumabot will do automatically provide this kind of visualization, and then it also provides kind of like a nice tier sheet, right, which shows you kind of all the different um, stats of how the strategy did. So it allows you it kind of gives you a feel about how things are going. Okay, that's still running. Okay, so anyways, we'll let this thing run. And let me keep going. Okay, so let's talk a little bit about the course. It's not this one. Where is it? Oh yeah, here it is. Okay. Okay. So yeah, so this is the webpage for the course. Let me kind of go over the curriculum. Um, so it's broken into three parts. The first part is like machine learning, kind of the basics, and then the second part is the project, and the third part is the capstone project. So week one, we'll be going over kind of introductions, everyone get to know each other, getting things set up. And then we go into the basics, right? We start with some really simple models just so that you can understand the flow of machine learning. And then we get into deep learning on week three and contrasting that to the shallow learning type of stuff we did earlier. Um, and then how do you train and validate deep learning models? And then get into optimizations. How do you optimize it? And what's the process? In the second part, what we're doing here is we're getting to time series forecasting, and I'll talk about the difference between the two, the theory, and how do we do training validation, and then we start actually building a stock forecasting model, and it could be crypto, it could be whatever assets you care about, and then part three, what we're doing here is we're pulling in natural language processing. So this is really important because a lot of alpha, so to speak, right? A lot of edge you'll get is from not in the form of numbers, but in the form of like articles or Reddit groups or Twitter feeds. And so knowing how to handle that and take advantage of human language type of data is going to be really important. And then we kind of end the second week on hooking that all together and and actually having a practical bot that you use to trade. So so the next class is in September, September 22nd. It's 8 weeks, and looks like there's some good discounts available. So take advantage of that. And let's see here. Yeah, questions. So I know I went kind of deep on the technical side, so I might have lost a few people, but just wanted to open up to see if there's any questions that might have come up or things I could kind of clarify for people. Any questions for anyone? Okay. So I don't see any questions right now, but yeah, I just want to encourage you guys to join our Discord channel or check out our YouTube channel. And yeah. Oh, actually, is there a question? Oh yeah, I forgot to put the link. Thank you, Robert. Thank you, Robert, for providing it. Um, Okay, so the question that David has is, will the bot be able to use for trading? And absolutely, absolutely. So each homework for each week is used to build your bot. So we start off really simple things, and then we go to more complicated things to kind of layer on more and more capability to the trading bot. So good question, David. So yes, the by the end of the 8 weeks, you'll have a working bot that you use for trading. Another question from Jim is, are CNNs used in the ML process? And so uh, convolutional neural nets typically are used more for computer vision, not too much in time series forecasting or NLP. We do use neural networks, but not really convolutional neural nets. So convolutional neural nets is the type of neural network. Convolutions are used in computer vision mainly because there's a lot of high dimensionality spatial uh, information with computer vision that's kind of redundant that you could kind of crunch down, and that's what the convolutions do. But for financial data or time series forecasting or NLP, you don't quite have to do that. So you do use neural networks, but not CNNs typically. Now there is one technique called temporal convolutional neural networks, which is basically instead of having um, instead of having what's called recurrent neural nets, you could use convolutions to basically get that time series aspect back into the neural net, and that does have some good results depending on how much data you have. Okay, David asked another question: Can the bots become more reliable the more they are exposed to actual trades, or will the ML component okay, I'm not sure I know the full question, but I think I know where you're headed. So David, yeah, so the fuel for these models um, is uh, is the data. So more training data we have, the better and smarter these bots get, and the more reliable they are. So traditional process that we use to build these bots is we start off with back testing, so just using historical data like I showed you guys, and then once we're kind of sure about that, we'll do paper trades, so not without real money, and then once it does paper trades well, then we'll have it do real trades, and um, so what's really important is actually this back testing portion. You cannot back test enough. So and then of course as we get more training data for the bot, it will actually become smarter. So yes, it's a very good point, David. Okay, yeah. So keep the questions coming. If there's any other questions, I could try to help answer. You could even set up the bots to automatically retrain themselves. So for instance, if the forecast error becomes too high, you could trigger it so that it will cause the bot to retrain itself. So that's another technique you could use. That's a little bit more sophisticated, but it's not terribly hard to get set up. It's just basically as the error increases, and error and most models will the error of the model will increase over time. So you will have to do some occasional retraining, and so you could have it so that it will it will automatically retrain once a certain error threshold has been met. Actually, I'm going to put it down here so it's easier. You guys can also see the questions. Okay, any other questions? Put them in the chat. Oh, Joe has a question. Can you create scanners? Yes, you can. And in fact, on Pika Group, we actually have a scanner. So it's a good question. So let me show that to you. Well, we call it a screener, but basically, um, what we do is we will we will um, scan a whole bunch of different securities over a whole bunch of different time periods to figure out which periods of time will be the highest performing securities. And so um, the only problem with these scanners is that they're very compute intensive. So you got to be careful not to go crazy on it because you could be left with a really big compute bill. But it's a great way because what you'll find is that even the most simple algorithm can do a pretty good job in trading. It just depends on what security you're talking about and over what time period. So definitely scanners is a really good technique. And do you think, David has a question, do you think bots will be proven better with crypto? Well, I think the advantage that you have with crypto with these kind of machine learning bots is that there's a lot more data. Because like I showed you earlier with traditional stock market, is that the market's closed most of the time. And so you don't have that much training data. But with crypto, the market never shuts down. It's 24/7. So you have even more training data. So yeah, and there's not as much machine learning applied in crypto. I think there's more in traditional stock market. So definitely, I think there could be advantages with crypto. So good question, David. Any other questions? Just put them in the chat. Okay, we'll give it a couple more minutes because I think we're scheduled for 1 hour. So any other last questions, just put them in there. Okay, it doesn't look like we have any other questions. So guys, just want to thank everyone for joining today. Feel free to reach out. Definitely encourage you guys to check out the course. At the minimum, look at the YouTube videos. All content coming out every week. And hope to see you guys on the Discord channel if you guys aren't on there already. Okay, so I think we are. Oh, is there a job title for this course? Job title or a course title? The course title is machine learning for finance and trading. So I'll put that in here. And I think Robert already put the link to the course, but I'll put it in there just in case. So check it out. And yeah, guys, just want to thank everyone for your time today. Really appreciate it. Okay, have a great day. Oh, actually, sorry. David asked, job title that a person can be hired for. Yeah, from this course, there's lots of different possible titles. I mean, it could be something like machine learning engineer. It could be portfolio manager. It could be quant trader. I mean, there's lots of different titles that are possible. But yeah, good question, David. Okay, guys, I think we're out of time now, but thank you again for everyone for joining us and for your attention. Really appreciate it. Okay, bye-bye.